Forex Trading Unlocked on December 5th for a daily Forex market analysis for you. And we're going to see how the currency crosses are shaping up today on Thursday with 1.5 days left of trading left to go into the currencies. So before we get into it, we're going to pull up our disclaimer real quick. Just to remind you that this webinar is for illustrative purposes only. And with that, we're going to jump on our live screen. And here we have the Forex-Trading-Unlocked.com website pulled up, and we already have the workstation from our menu pulled up for this page. And let's see, the economic calendar. All right, we've already had some numbers that have come out already. We still have, let's see, nothing really. You have leading indicators for Japan and the coincident index as well, and also foreign reserves. So there are, excuse me, a few numbers that will be coming out yet for Asia later on today, this evening. And let's see, then December 6th, which is tomorrow. Here we go. We got some good stuff coming out for you tomorrow. So we have for Germany, we have industrial production, which is a very big number for the EU. Then we have, let's see, we have for the UK, we got the Halifax house price, and then we have an employment number for the Canada. We also know that we have the U.S. unemployment number, and we also have the University of Michigan sentiment preliminary number coming out as well. So we do have a nice basket of economic numbers, especially being the employment number. All right, so now here we have our chart pulled up. We can take off the news here, and we're going to get rid of this volume also. Okay, so the euro had a nice little rally yesterday. It made a higher move high, even though it settled lower. The market is now trading higher again today. So it kind of, if it was rallying like it had been rallying here, and then had a day like it did yesterday, maybe this market would have ran out of gas more and might actually be correcting. But right now, due to this situation where it's at, because it only had been rallying for a little bit, this is just a slightly, because it's been bearish for the past month. Right now, this is still a corrective move higher because we had set this lower low. Now, yesterday set a higher move high. So that kind of takes us off the short-term bear trend for a little while. So let's put this little downward sloping resistance line in here. And then we're also going to put an upward sloping resistance line over here, and it's base pushed off of our low from Friday. Okay, so right now we have the market is kind of really more in a sideways plane than it is anything else. In fact, we're going to pull a little pivot here. You're going to see something like, especially with this low right here. Okay, let's make this a little bit clearer for you with a nice color that jumps out. See how fast we can manipulate this stuff on our website at the Forex-Trading-Unlocked.com site. You can just change the symbol right here for any market on any chart on any page. However, we do have some page-specific things set up that kind of help you out for each one, for each market. Now, that being said, let's get back to our analysis here. So we had this high here, made our lower, excuse me, our higher move low here, lower move high, lower move low, lower move high, lower move low. So completing our right now, is it a continuation of the overall neutral, the bearish trend, or is this a correction and a good buying area for a potential new turn in the euro-US dollar? Now, for those of you that watch the dollar index, and if you trade the foreign currencies, whether it's in the Forex market, the futures market, or in some sort of options market, you should pay attention to the dollar index. The dollar index has been selling off over the past few days. It had made a higher move high and a higher move or lower move low recently. In fact, so just so you know what I'm talking about, I'm going to pull up the Dixie chart and see how you can see how this works here. So as you can see, the market had on Friday had made a higher move high. Kind of looks like another chart that we were just looking at, right? And then here, it had a nice slide since Friday, and it made a newer move low on Wednesday, or excuse me, on Tuesday, and then also again on Wednesday. This is very significant. This is quite a sell-off in the dollar index, considering there hasn't been any really major news to really influence this. Now, after having made this low here, it made this higher move high, higher move low, higher move high, now a lower move low. So this really has us in a static neutral to lower bias for the Dixie, for the dollar index right now, at least in the short term. And you can see how this pivot where I put off this higher move high here, how this becomes a period where the market, the dollar index, it spiked here, failed. Tried to get up there, failed. Finally got through it, looped up, and then it just got into a chop fest around it. It could barely hold above it. It's every day that it got closed above it, it reversed and settled below it. Very, very weak when it comes to this pivot. So it's a good directional level. You can even see how here it spiked up, came down above it, and then boom, this was the sell level, where once it's really below here, it just has a lot of trouble. So it's definitely looking that this here might be the cap of for any rally right now, short term. And then here I would put this here based off of this low. And you can see how these lows, this is kind of like the range area right here. So this is, right now, we're in the lower part of this band. Am I overly bearish the dollar index? Right now it's looking kind of heavy. I think that if we can continue, especially if we take out this low here, then we're probably going to see an extended sell-off that will start to lower the range for a while for the dollar index. So that being said, if the dollar index remains weak, let's go back to the euro US dollar. So if rising tides lift all boats, then a weaker dollar, which is the largest currency in the world, should give some lift and relief to especially some of your major cross rates. One of which would be the euro, which is one of the biggest currencies against the U.S. dollar. Now, one thing about the euro is it is becoming a reserve currency, but it's a reserve currency of debt. So for some reason, while a pound, for instance, yesterday had a mega rally, and the New Zealand dollar, even some of your lesser currency crosses rallied, the euro, it rallied and then it just couldn't sustain itself. So it's the euro and are acting very differently when it comes to the dollar. It meaning that, for instance, when dollar strength comes in, the euro will get hit. When dollar weakness comes in, euro strength does not come in as hard as it would if it was the opposite with dollar strength. So in other words, euro strength will not come in as strong on dollar weakness as euro weakness will come in on dollar strength, if that makes it clear for you. So that's something to keep into perspective, that right now this currency is starting to have a new dynamic. I've been trading the euro since it's been a cash product. I've been trading the futures for almost 30 years. I've been trading for 30 years, but the currencies didn't start until the early 90s. But I was trading the D-Mark before there was a euro. So that being said, I am very familiar with the ranges and the correlations over the years, and obviously nothing is perfect and things diverge and change. But as far as the average true range and the dynamics of the volatility for swing trading in the euro US dollar, things are not doing what they had been for a very, very, very long time. And to give you kind of an idea of what I mean about that dynamic, let's show you the euro British pound before we get to the pound dollar. Now we see the euro has been basically in a sideways trend for months, and definitely for the past year. Look at this. When it comes to the euro pound, this has been trending lower since back before the currency started to gain a trend, whether it was the pound or the euro or anything versus the dollar. The euro has been disintegrating against the pound. Now, we know that Brexit obviously has something to do with it. So euro weakness and pound strength, I think, is, as we do, no matter what, get closer to a Brexit deal, and the reality that it is going to happen. Now, for trade, that can have some big ramifications, obviously, for both the UK and the EU. The EU being the bigger one, especially considering that they keep screaming recession, recession, recession over there. This doesn't bode well for the euro currency as well. And this is how you can see with this, the trend is pretty steep. Now, the one thing about this trend too is if you look at this as our downward sloping resistance, the overall trend, it's not, we have a radical move that had occurred here, but as a whole, the ranges haven't been too drastic, and for the most part, it's just been slowly coming down a slope. It hasn't been violent like this one here. And then you can see once it did have this big move, it didn't even start to go down anymore. It just went sideways forever here. This is for a whole month of activity before it started to grind lower. And now in the past few sessions, and this is on dollar weakness. So dollar weakness, like I said, remember how I showed you on the euro US dollar, how when the euro would break with when the dollar on dollar strength, it would break more than it would rally when there's dollar weakness. So now we have dollar weakness, and in the middle of dollar weakness, we also have euro weakness versus the pound. So that being said, we're going to go to the British pound US dollar and see what's going on there, because that should be strong, especially versus the dollar and the euro. Oh my goodness, look at what we did. Now, obviously, I could have looked at the chart before the webinar. I didn't, but I just know the correlations here. So this is pretty interesting to kind of reaffirm the strength of this current rally here. Now, this one began here in September and then was reaffirmed in October with a big blast. If you see this trend line here, this is a good sloping trend line. So right now we're kind of pushing the upper extremes, but since the market for the British pound had been going sideways for so long and churning here for a month and a half, that's probably why, since we broke out to the upside, we're pushing the upper parameters of this range. So this being said, by attrition, we could come back down into this area in the next like couple months, especially if the market starts to, let me draw this for you here so you get an idea. Let's say that the market stays on its highs today, and for the next couple sessions, whatever, it continues to come up. It could trade like this and then come down and then start to continue to ride the trend. So if this makes any, let me get this dot out of here. Okay. All right, so if you see this little line here that I drew here, this is what I'm saying. Since we've had this breakout, above this pivot here, this past high, you're probably going to find a lot of support. So with the momentum right here, with the weakness in the euro and the weakness in the US dollar, the pound right now has a very good chance at pressuring resistance up above this buck 32 area. And then if it starts to take a little profit taking digestive mode, it could hang in this area by attrition for the next like month above a buck 30. And then it starts to get closer to this upward sloping support line. So let's get this pen off here and get this cursor back, so I'm going to stop making all this mess. Okay, so now since I pull this chart over here, you can see what I'm starting to talk about now. So as we get into the end of the year, we could see the pound still pressure resistance for the next week or so. Maybe not, maybe extreme, maybe not. We could still go up to a buck 33, a buck 34 with this kind of momentum. But we don't want to put the cart before the horse. Let's just say that we get a nice swing here and it comes up and it starts to test here and starts to ride along here. That would put us into the beginning of the year, and then look at how close we would be to this upward sloping support line. So then, let's say we have some bad news and the pound takes a hit for whatever. It could come down to this line, bounce off of it, and still look at where it's at. It's up around a buck 28. It's not much lower than where it is now. So any rally that takes, especially $1 to $3 or $4 up, like let's say up to $1.36, $1.35, should it get that extreme, a correction off of that would just put it back into this area. So this is a very strong indication right now for the pound. Now here's another thing that you need to think about when it comes to the British pound. On the 13th is when they have their elections. So here we have December 13th, which is right around the corner, folks. Now, Brexit is not happening on December 13th. It didn't happen on October 31st, so it's not happening on the 13th. But these elections would secure Boris Johnson, and as long as he doesn't have any ridiculous gaffes over the next weeks, and this kind of fits into, I just drew that line for the rally, but look at this, with this date, this would be the perfect time zone for the pound to continue to rally over the next week, start to go sideways into this date, and then once it's done, regardless who's done, well, if Boris Johnson gets elected, you might still have another surge, and then start to come sideways. And this could really become this big support baseline where this past high here, this buck 30, 13, this could become our base, literally for the next couple months, maybe even upwards of a half of a year, which is kind of good to know, because currencies trend, and if the pound was to gain that much strength in the midst of a potential Brexit final deal. Um, it's just big to know because that means as far as the U.S. dollar and the euro, which are two big currencies, well, the dollar is the biggest, and the euro is pretty even with the pound. That's when one currency can swing those up, sway those other two. Like we looked at that pound, that euro pound chart, that can give us some nice cross rate trades between these other currency crosses where the dollar is not involved. And that's something to look forward to for the new year because if you, as you saw that trend there with the euro pound, that's a big trend. Just catching a corrective move, like once the pound does start to fall back and correct, which all markets do, then we'll have a chance to, whether even if the euro is falling against the dollar, the euro may gain a nice move against the pound. Markets don't just trade in one direction, as we all know. Okay, so we've looked at the European markets except for the U.S. dollar Swiss. So let's see how the U.S. dollar Swiss is doing. Look at this. It got hammered. This one looks just like the dollar index. It made a higher move high, and then it made a lower move low as of yesterday. And yesterday it did settle positive after making that lower move low, slightly out the low from the prior session. And look at today. Once again, it is hanging here. What I think really happened yesterday after this extreme slide. I mean, look at the Swiss went from parity to 20 pips above parity to down to 98.60. So that's a whole dollar. That's a $1.60. It's a 160 pip move in just a couple sessions, which for the Swiss is a pretty big deal. And this gets back to once again what I was saying about the euro, how it doesn't move like it used to. The Swiss over a couple days had a very radical move here. The euro barely moved. I mean, it rallied, but not in retrospect to the volatility that this U.S. dollar Swiss has. And the euro, which not unlike the D-mark, had always moved. It stretched a little bit more than the Swiss always would because the Swiss is one of the most stable reserve currencies in the world. So even when it's trending, whichever way it does, it typically doesn't have the momentum that something, say, is the euro or the pound, which seems to overtrade a lot. It definitely gives you volatility when it comes to a currency market. So with that being said, parity rejected once again here by the U.S. dollar Swiss trade here. So you can see this little area here. This is our little rejection point here at parity. It's had lots of trouble with it. Now, this is a big slide. You can see how it's been breaking here and it bounces right back. Could this come right back up to parity? Absolutely, anything can happen. But right now we have a higher move high followed by a lower move low. Now this is a neutral trade. Look at this. This is kind of nasty. This has been going sideways now for, let's see, the lower end of this range is right around here. So you're going back to August is when it came into the bottom part of this range that's been trading at, which is 98.40 up to parity 40. So you're only looking at a $2 range for the past 4 months, going on 5 months. It's kind of a big deal. So just to have as far as perspective. So for range traders, things are pretty great. For swing traders, it's a little bit rough for breakouts in this market. And you should use caution because it seems to be the tone, what's going on with this market right now. So with that being said, we're going to go and look at the U.S. dollar Canada real quick. So the U.S. dollar Canada had a interesting week because the Bank of Canada had a meeting this week, and there were some very big economic numbers. Now, as you can see, the U.S. dollar as a dollar index has fallen apart. It finally did seep into the Canada, even today making a lower move low. Now this is interesting. When the other currencies started to move, this is started to move only 2 sessions ago, and that's because they had the Bank of Canada meeting. They met, and then boom, the rug fell out. The U.S. dollar all of a sudden started to fall down against Canada and fall in line with the other basket of currencies that had been rallying against the dollar while the dollar was weakening. But that's because of the rate decision, and I think that the sideways action here was going into that, and then obviously because a dollar move had happened once their central bank had met, boom, all of a sudden it took a hit. Now here we have a market that had been going very steep. So if you look at this trend line here, you can see that while this market has been railing, that's a very steep slope. So, and as it came right into it, right there, ironically, here you have your central bank meeting in Canada, and then here becomes, boom, your slide. Now, what also has occurred here? So off this low, we have a high, higher move low, higher move high, higher move low, higher move high. We go into sideways trading here. We made a higher move low, lower move high, and then boom, we fall down. And we also took out this low here, which is key. So there's two levels here I want you to look at. This is really big for the US dollar Canada. We have this level here, and then we have this swing low here. Okay, so now we are trading below both, obviously, and then we are below the current one here. Now it's trying to come back. Excuse me. I would say that anything above $1.3193 here will put you in a range trade back up to $1.32.53. As you can see, over the past months, it does a lot of trading in that range. Above that would be your next step up to try and get to this upper buffering part of resistance, which I don't see it happening right now. Just because the dollar index is weighing low. So if the dollar index continues to trade lower, I think that now the U.S. dollar Canada is most likely going to start to also continue lower with that other trend. We'll see how it manifests. Obviously, you can see that it had a nice sell-off. Once again, the pause and the delay in this market versus the others, I think really is attributed to the Bank of Canada meeting. Now we're going to switch over to Asia and see what's going on with the U.S. dollar yen. U.S. dollar yen, just like the euro, has been a market where when the U.S. dollar rallies, the yen falls apart in a big way. And then when the dollar falls apart, the yen initially will have a big shock like some of the other major currencies, but then it doesn't follow through. It snaps back right away. So that being said, you can see this from this chart, how it had made this higher move high on Monday and then fell apart. Now the dollar index was breaking already since Friday, and the yen continued to break, but then yesterday it bounced, just like the dollar index kind of had a little bit of a reprieve. And then today you can see the dollar index where it had made a lower move low yesterday, and it's right now kind of weak. This is just holding it kind of in a static environment. So right now the overall trend is bullish. You know, you have right here from obviously from the low here, we have the high, low, higher move low, highs, higher move lows, higher move high, higher move low. Just recently made a higher move high, and then yesterday we made a low, but we're still above this area here. So I would use this as your critical support level here around $1.08.225, and anything above there you're probably going to be neutral to higher. But we also could have a potential. Now here's the thing is, remember, if the dollar index turns, what would that mean? Then we would have a really good chance at the yen taking out this $1.08.225. But that would have to be because of the dollar index really getting slammed. Remember, like I said, the U.S. dollar yen has, just like the euro, when the U.S. dollar is strong, it rallies it will hit the yen and the euro very hard. When the U.S. dollar breaks, initially, if it has a big slide, you'll see a reaction in these currencies. But then, as you can see here, as the U.S. dollar continues to weaken, the yen, just like the euro, does not strengthen against that as much. So that's something to definitely use when you are trying to figure out your bias, whether you're bullish or bearish. I would say that when the dollar is bearish, you want to be relatively lighter bear on the U.S. dollar yen, and when the dollar is bull, then you obviously right now, at least the way it's trading, would ride the dollar bull. You remember the U.S. trade China talks are also coming to a head. Supposedly they've been coming to a head for a while, but there has been a lot of talk lately. We are coming in front of Christmas time. We're getting closer and closer to Christmas when the holiday shopping is already. So let's see if I would say probably not today, but maybe tomorrow after the markets close or right before the markets close, you might see something where even the president comes out and says something about giving a little reprieve on tariffs for Christmas time. I don't know if that's going to happen. It would be perfect, and then it would be something to get a surge, and obviously would impact the currencies come Sunday night, Monday, as that if something like that would occur. Now, should it not occur and the dollar index continues to break, then we have a head and shoulders potential here. We have this is a shoulder right here. So right here we have one shoulder right here, and then we have the head right here. So let's use this little trend line here. We're going to set this up right here. So if this here is a shoulder, okay, we're going to use this little low here, and we're going to toggle it right here. So we're coming into an area where this is the head, and this is starting to come up, and we run out of gas. Boom, we're going to have a little sell-off. So we have a couple tight levels here for you to look at. So initially we have our upward sloping support line, which is relatively a slight slope. So to maintain a trend like this, it doesn't take a lot of momentum to creep higher like that. However, remember, like I said, dollar index is under pressure. So if we fall below this upward sloping blue line, then obviously we would be laying pressure on the buck 08 462 and buck 08 25 support band right here. And then definitely if we fail from here, we obviously are below the upward sloping support line. Then we're also making lower move lows, in which case that would support our theory of a potential head and shoulders, or definitely a negative slide, regardless if it's not a head and shoulders that arises. But we do have a potential sell pattern that is unfolding here, and that would go with our US dollar index theory. So let's bring up the Australian dollar, US dollar. This one has been an interesting trade, like a balloon underwater. It exploded on Monday, and then even yesterday it tried to hold up and settled basically unchanged. As you can see today, it's falling back. This one has been an interesting currency because of the trade wars and whatever. It's been laying kind of heavy on it. You can see that it's in right now, even though it's been railing for a couple sessions, it's in an overall bear trend over the past month. So this right now could just be a corrective rally before it starts to trend lower. I'll use a lot of caution with this one, but this is an easy one to call a breakout onto the upside. So if we get this line here and we put this in here, and we then take out, so you have our downward sloping resistance line, and then here this high would be our upside breakout. So obviously taking out this pivot here and this high would take out the downward sloping resistance and our pivot. So at 68.61, right around here would be our breakout level for the Australian dollar, US dollar. Any trading below that keeps it in the sideways to neutral lower posture. And this slope right here would be an easy slope for it to maintain, kind of butting up against this blue line, and then if it fails because of weakness and dollar strength, the trend would maintain. But like I said, with the dollar index looking kind of heavy, then you may have a chance of this being a digestive little pause right here, and then we take out this high and begin to make a run for this high up here. So we'll see. This one's a little bit of a tough call because of the trade wars that are going on. So now New Zealand dollar, US dollar. Let's see what's going on here. This market, like a balloon underwater, boy, did it take off this week to make new highs. And then once again, even today, it's made higher move highs. Now this was in a situation too where it looked like it had a little head and shoulders forming. You can see right here, this would have been a shoulder, this would have been a head. You know, it had this little neckline that was going down, and it was going sideways here. It really looked like it was just going to fall apart. And then, of course, it didn't. It broke out to the upside, and it took out not only that little resistance line, but it also took out this high, and boy, did it take it out. Like, this was a nice move. Like, from here to here, it's already had the expansion, and it's been buffering up against resistance. But this is a bull right here. This is not just a dollar index related move. I mean, a dollar index slam, but this is something where this market broke out. It was going sideways for a while. This currency is impacted by the U.S.-China trade deal as well, but they're not as heavily centralized into China as Australia is. So for New Zealand, this is a pretty interesting sign once again that kind of backs us up that when you have a lesser major currency cross like the New Zealand dollar rallying against the dollar like this, we're talking about New Zealand here. Not to discount them, but there's no reason for this one to be so extreme unless there was true dollar weakness coming into play or a belief in that. And that's where I think you're getting this explosive move here in the New Zealand dollar, just like you're getting it in the pound. And unlike the yen or the euro, which seem to have this, like I mentioned about this reflective indifference of weakness and strength versus the dollar, it doesn't seem to be coming into play here, which is nice to know because you can see, like even today with follow through, the bulls are getting a play, they're getting nice range, and as we come into like I said, with all these other major currencies making moves, usually this is the time when the New Zealand dollar currency cross would start to slow down while the other ones are heating up. And that being the case here, I would be a very cautious bear. I would not try and pick a top here at all. You should never try and pick a top or a bottom. Now, if you're a bull and you want to take some profits, now might be a good time in front of all these economic numbers tomorrow, especially because we have unemployment. You get a lot of knee-jerk reactions. We haven't as of a long time, but for someone who's traded unemployment since for 30 years from bonds and currency perspectives, a lot of times I say get out. Right now, we know most likely the unemployment number is going to be okay in the U.S. in front of the holiday with probably a lot of surge of hiring and whatever. So only a really unexpected change in the number of forecasts would really shake the market. But then also remember, you're at a record low unemployment in the U.S. Also. So any uptick in unemployment, it doesn't mean anything because we're functionally underemployed right now in the United States. So of course that the markets don't care on when the number comes out for about fundamentals. All right. So that being said, we're going to go back to our U.S. dollar. Oops, let me put the wrong. Okay, Euro US dollar. So you can see on any chart, you can just pull up the symbol and it will change. Now, since we've been staying on the same chart, if you as long as you don't close it down, and you just keep changing symbols, your old chart comes back with all of your work. Isn't that nice? So here we are. We're looking once again at the Euro US dollar. We now have our bias that has the dollar index under a little bit of pain, under a little bit of weight, and which is giving a lift to the other currencies. So not that the other currencies like the euro or the Swiss or the pound or the yen or any of these currencies are necessarily strong. Right now we're looking at dollar weakness. Now remember, we do have an impeachment trial going on of the U.S. president and Donald Trump. Whether he comes in this good or bad, who knows right now. As long as it is going on, it does lay pressure on the euro, on the dollar, which in the short run doesn't really hurt the U.S. because the dollar is so strong. And coming into an election year, the end of this year, and to start the first quarter out, if the dollar weakens, whether it's because of the impeachment trials or whatever, that just most likely drive earnings for the next 2 quarters in the U.S., meaning that you'll probably see a lift in support to the U.S. stock market. Obviously, if earnings come out strong, and then if the dollar does remain under pressure for the next couple months, and the president's, obviously we know this impeachment trial is going to be going on for the next couple months, that's a big deal. It's a very big deal for the U.S. dollar. It means that it'll lay weight on it, which will give lift to the other currencies. And once again, it's not that the other currencies are strong weakness, that even though it's not overwhelming, it is here, and it's giving traders a reason to sell off the dollar anytime they can. Just remember, once again, the euro and the yen don't seem to want to ride that trend as much as the other currencies. So if you're looking for a volatility play for, especially going against the dollar from buying dips in a market, I would say the pound, New Zealand dollar are really good options for you right now. The euro and the Swiss and the yen, you're not going to get so much play. The Canada is a totally indifferent currency when it comes to all those things, so it's on its own. We always have to take a look at that one on its own merits. Well, just like all of them, they all have their own little beasts on their own right, but some of them do tend to trade in tandem. So with that being said, we have no real trade signals. We are waiting for some to shape up today and tomorrow and to end the week. Hopefully we get some. We're still riding that dollar index sell signal from October. We had that bearish engulfing line on the monthly basis. In fact, I'll pull that up for you so you can see. And this is kind of crucial for you to look at the dollar index. One last look before we close out today, folks. You've lasted this long, you might as well see what I'm talking about. So we're going to look at the dollar index real quick. And what we do here with the dollar index, we're going to go and pull up the monthly. So we saw the daily. We put those levels in. You see they're there. Now let's go back to the monthly. Oh, wow, look at that. So if you look at this big red line here, this was October. I'm going to put a little arrow here so this looks clear for all you people out there. All right, so here was October. We had this big bearish sell-off. The whole month of October, the dollar was under siege. In November, we came back, and you can see that's the lower part of our little band here. This 98.54 down to 97.09. This is our band. Now, we are now trading lower. We're only a few days. We're on December 5th, and we've already almost retraced the whole month of November. So what does that look to you like, folks? That means that if this scenario pans out and this sell signal from October is correct, and which is a bearish engulfing line, it's a high probable Japanese candlestick sell pattern because we had this big rally. You come in this bearish engulfing line. No, now this is a monthly chart, not a daily chart. So even if it was a daily, you would expect maybe a little bit of profit taking after a big move, big sell-off like that, especially when you're nearing a top. Let's just assume it's a top. We never want to pick a top or a bottom, but let's just assume that the sell signal is right and we have a short-term top in place here. So what would that mean? That would mean that the month of November was just nothing more than a corrective profit-taking rally, and now we have the month of December where, since Friday, actually the last day in November, the dollar index has fallen apart, and it's been falling apart for days, and radically, because it's basically removed all of the profit-taking that had occurred in November. So, that being said, if this continues and we take out this 97.09 lower green pivot point here, that would be a major sell signal, because then you're taking out the trend here. Look at how this has been a nice sloping trend line here for the dollar index. And look at this. We're coming right here. It's a nice slope, not too radical here. That's something that can be maintained. But what happens if we take out these lows? Boom, we take out the support here. We take out the upward sloping support. That confirms our sell signal. So right now we are in an area here where this looks like to be a sell signal. Now look at how fast we can clean these charts up, folks. Make this where you can see what we're talking about here. All right, so here we have this line here. Okay, so here is our sell signal. Another interesting fact about the dollar index is this is a major head and shoulders it's forming. We have a shoulder here, we have a head here, we have our neckline, and then here, if we have the sell signal, if this is the shoulder, that means that most likely we're going to see the dollar index over the course of the next, few months, especially if it takes out this low, it could come down this way, So now how much is it going to do that? I don't know. But this is definitely a situation where even if it was to come down to, let's say, here. So you could see here, you have this is the main trend right here. So let's say that off this low, we have this high, this low, excuse me, and this is just a lower move high short term. It can bounce off of here and then go up again. So just short term at least, we're looking for it to come down to this upward sloping support line right here. So very interesting stuff that's shaping up in the dollar index. You always want to use something like the dollar index to give you a gauge against your broad base of currencies. So, and with that real quick, we just want to show you this last slide, since you stuck with us so long, and since we talked about this sell signal in the dollar index. If you want to learn how to capitalize off of candlestick patterns and how to use them correctly, which most people use them incorrectly, read the book High Probable Japanese Candlestick Patterns. It's available on Amazon.com in paperback and Kindle version, and through it you can utilize the best buy and sell patterns used for over 400 years to give yourself a competitive edge against the markets. In that book we have lots of money management techniques and how to apply them to different systems. We have a system that you can apply with yourself and then put your own additions to it, check it out. You can use it for Forex markets, futures markets, stock markets, option markets, all kinds of markets, and we show how to use correlated markets and trade other markets off of signals in the currency markets, and also in other markets, so using these patterns. So with that being said, I'm Teddy Kegstedt from Forex Trading Unlocked. We'll always come and check us out daily at www.forex-trading-unlocked.com. Please check out our videos on YouTube as well. You can check past analysis videos and lessons and stuff like that and see what we're all about. And please subscribe, because then you'll know when we have new videos and stuff. Or you can go on the website and subscribe to our email. So with that being said, thank you very much, and you have a great day from Forex.